What investments are forbidden by Jewish halacha? Imagine putting your money into something that might go against your values without even realizing it. That's why understanding what is forbidden in Jewish law is so important for investors. Jewish halacha guides us to avoid certain types of investments to stay true to our ethical and religious principles. First, investments involving ribbis or forbidden interest are a major concern. Ribbis means charging or paying interest between Jews. If you buy shares in a bank or a credit card company that lends money and charges interest, you could be indirectly involved in ribbis. Halacha requires careful structuring to avoid this, but passive investments in non-Jewish managed funds might be acceptable depending on the situation. Next, investing in companies involved in forbidden industries is another restriction. This includes businesses that sell non-kosher food like pork, or those involved in activities like gambling or selling alcohol during Passover. If your shares are in such companies, it could be problematic, especially if you depend on them for your livelihood. However, some authorities are more lenient if the shares were acquired incidentally or as part of a broad, diversified portfolio. The key is to avoid actively supporting or benefiting from these industries. Another area to watch is companies that operate on Shabbat or violate other ritual laws. For example, a company that keeps its stores open on Shabbat or produces kamates during Passover. Most authorities permit passive investments here because you are not actively causing the violation. You are simply a shareholder seeking profit, not directly involved in the misconduct. The principle of Lifnei Iveir, or avoiding placing a stumbling block before the blind, also influences investment choices. If your investment enables or encourages others to sin, it could be problematic. For example, buying large amounts of stock in an IPO that promotes forbidden activities might be seen as facilitating sin. But generally, this concern applies only in specific, direct cases. Some opinions also view stock trading as similar to gambling, which is discouraged in halacha. If stock ownership is seen as a form of speculation rather than a legitimate business, it might be forbidden. Ashkenazi authorities tend to permit stock investments as part of a balanced portfolio, but some Sephardic authorities recommend consulting a knowledgeable halachic authority first. Practically, when choosing investments, it's wise to avoid companies engaged mainly in forbidden activities. Supporting businesses that promote social good aligns with Jewish values and can be a form of tzedakah or charity. Structuring investments to avoid ribbis and passive investing in diversified portfolios that exclude forbidden industries helps maintain compliance. Always consult a qualified halachic authority when making complex decisions to ensure your investments align with Jewish law. In the end, avoiding forbidden investments means being mindful of where your money goes. It's about ensuring your financial activities reflected your ethical and religious commitments, supporting a just and moral society while growing your wealth.